You've probably heard Bitcoin referred to as digital gold, and I've made a number of videos on the topic of why I think it's digital gold, but I still see the question being asked, and I got asked the question the other day, if Bitcoin is digital gold, why doesn't it basically behave like gold? Like why, for example, when Trump tweeted about tariffs and sent traditional markets tumbling, crypto markets into a bloodbath nosedive, Bitcoin dropped basically, call it 10% in a day, right? Which sounds like a lot, especially compared to traditional markets, and very much so compared to gold, which either stayed flat or even, I think, maybe went up like 1% on Friday when all this was happening. So the gold bugs will take a victory lap after that happens. And it begs the question by them or just by normal people who've heard us say Bitcoin is digital gold. Well, if it's digital gold, why doesn't it behave the same way gold does on a day like that? Or why don't you look at a chart and see Bitcoin just behaving exactly like gold? So that's what today's video is about. If Bitcoin is digital gold, why doesn't it always behave like gold, basically? And why do we keep saying it's digital gold? Is that a lie? Are we wrong? Personally, I would say there's basically a short answer and a long answer. I'm going to give you both. So if you want to just hear the short answer and click off the video, go for it. And then I'll give you the long answer. The short answer, in my opinion, is basically Bitcoin is 16 years old. Gold has been a globally recognized store of value for, call it about 5,000 years. So gold has better branding at this point, is a simple way to put it. If you think about every person in the entire world, every market participant knows that gold is an asset that's been able to store its value and increase its value in purchasing power terms for roughly 5,000 years. People know of it as something that's stable and can store its value. So in a market panic, like last Friday, a couple things happen. One, people don't dump their gold when they see macro factors, affecting all their other investments. They don't freak out and dump gold because they believe that gold is a long-term store of value because it has been for so long. They don't think whatever macro news, tariffs, or whatever is going to hurt the value of their gold, so they don't dump it. And the other thing that happens is they might dump other things, especially if it's late on a Friday, low liquidity, traditional markets are closed. They're going to dump whatever they can that they see as more risky and more volatile, and they might rush into gold. So you might see the price of gold go up in a case like that. So people are treating it like a very safe, non-risky asset. Risk off is what they call it. And it's held that function for so long that people believe that it'll continue to hold that function going forward. Therefore, look at a chart, it's not treated like something that's risky, that's going to lose its value, which makes perfect sense. So what's the longer answer? Basically sounds like I'm making the case for gold over Bitcoin, doesn't it? Okay, well, the longer answer is those of us who believe Bitcoin is digital gold and say it's digital gold think that there's actually a little bit more to it than just looking at the price chart and seeing how something performs, especially in the short term. Because if you just equate things by looking at how they perform on a price chart and not understanding the fundamentals going on underneath the surface, then you're probably going to miss some important details, don't you think? Like if I just pulled up two stocks and I showed you that their price charts are exactly the same, and you said, oh, these two things are exactly the same, and then I showed you, oh, one of them's Amazon and one of them's, a penny stock, you realize, oh, maybe I should have looked at the fundamentals underneath, right? Or say, for example, if you just compared the price chart of a Bitcoin treasury stock to the price chart of a rug pulled meme coin, you might think that those two things are exactly the same and that there was really no fundamental difference between them when one of those things holds Bitcoin and the other doesn't. Or maybe that's just a bad example because maybe they are the same thing. I don't know. I've been talking about that a lot this week. Watch those videos if you want. I personally don't go around saying that Bitcoin is digital gold because I think that it is or does or is supposed to perform exactly like gold does on a price chart. That's not the reason that I think that Bitcoin is digital gold. I say that Bitcoin is digital gold because I've studied the history of money and I understand the properties that made gold a store of value in the first place, going back 5,000 years or more. Because I've tried to understand why this one metal that's just a shiny yellow rock became this long-term store of value that people trust to hold its value for thousands of years, and billions and billions and billions of people have believed in it as that store of value. Why did that happen in the first place? I've made a lot of videos about this, but there are underlying fundamental reasons why gold became the store of value that it did, why it was used as money. What are the properties that gold possesses that gave it monetary value in the first place? And once it gained that monetary value and it kept it for over 5,000 years, now it has solidified its role as this global store of value that everybody understands. Again, the branding. 8 billion people in the world know that gold has value because they were born into and grew up in a world where it already had value for generations before that. So they don't even really question it or bother to think about it or understand why that happened. But to understand why gold has value, you have to go back in time and understand what monetary properties made it have value in the first place. I've made other videos about those fundamental properties and what they are. I won't go all the way and explain each one of them, but generally the monetary properties that a commodity good needs to have to make it turn from just a regular consumer good or a commodity or a collectible into money, they are durability, portability, divisibility, fungibility, verifiability, and scarcity. And if a good has those properties, it can enter into the free market competition of monies and try to outcompete other things as money. And the ones that store their value better over time usually have a lower inflation rate. And that's why people gravitate to those over other forms of money or stores of value. Lower inflation rate typically is determined by a higher stock to flow ratio. What that means is of the total overall supply that exists, say of above ground gold, how much more is being introduced every year. So the asset with the higher stock to flow ratio, essentially the lower inflation rate, meaning it's being diluted slower, which means it does a better job of storing its value over time into the future. So gold did that for a long period of time and beat out other monetary goods or stores of value for hundreds and thousands of years to become the gold standard that we know it is today. Well, it turns out that the reason we say Bitcoin is digital gold is because Bitcoin was engineered to have, by Satoshi Nakamoto, who clearly knew the monetary history, engineered Bitcoin to have the same monetary properties that gold has that made it that store of value in the first place. So the point is, Bitcoin has the monetary properties it needs to have to become money and to become a store of value, to be able to store its value into the future. It's durable, portable, divisible, fungible, verifiable, and scarce. And it has a higher stock to flow ratio than gold and a lower inflation rate than gold. And it has a total finite supply cap. So its ultimate stock to flow ratio is infinity once all Bitcoin is mined. It's essentially reaching the point when, say, all below ground gold had been mined and it's all above the ground. Then the stock to flow ratio is infinity because there's no more supply being introduced. That's where Bitcoin will hit, but not for another, 120 years or whatever it is. But so if you study the history of money, you understand the monetary properties, then you know that Bitcoin has the monetary properties it needs to have to just enter into the free market competition of monies, and it's likely to outperform other types of money or stores of value because it's better at serving the properties of money. Turns out that Bitcoin is actually better than gold because it beats gold on some of those specific monetary properties. Like I said, it beats it on scarcity because of the total finite supply cap. It beats it clearly on divisibility. It's easier to divide Bitcoin down into small amounts and recombine it up into giant, large amounts. It beats it on verifiability, and it definitely beats it on the big one in a digital age, which is portability. It's very hard to move gold around the world or transact in it, especially in large amounts. Whereas Bitcoin is essentially taking the ability to dematerialize the gold and send it anywhere in the world in under 10 minutes for a very small fee to anybody in the entire world. That's a very useful feature that if gold had, we probably wouldn't even need Bitcoin. But gold doesn't have it. So we do need Bitcoin. And Bitcoin is better at being money than gold is largely because of that factor. That's why we say that Bitcoin is digital gold, is because it has the monetary properties it needs to have to compete in the free market of monies in the same way gold did. Now, if you go back to the short answer that I gave earlier, what that just comes down to is not everybody in the world knows that yet. Because gold's been doing its thing for 5,000 years, everybody in the world knows what gold is. Now, the irony is that they don't really study it and understand to know why gold became gold. They just know gold is gold. But with Bitcoin, there's plenty of people in the world and plenty of market participants who still view Bitcoin as risky and volatile and don't understand the underlying fundamental factors that I just told you. So when it comes to the price chart, there's a lot of people who trade Bitcoin like a volatile, risky asset. When something in the global market or domestic market or whatever concerns them, especially late in the day on a Friday when other assets can't be bought and sold, they might dump their Bitcoin because they're not long-term hodlers. Either they don't understand what I explained to you already about hard money, or they don't care and they're not in it for that. They're just in it for whatever is going to go up, in the short term. And so when they feel some degree of risk, they just sell the thing that is the easiest thing to sell because crypto and Bitcoin markets are 24/7 and traditional ones aren't. So they sell the thing that, they think or feels risky and that is the only thing available to sell. So they're not holding it over the weekend worrying what, Monday's news is going to hold or what's Trump going to tweet over the weekend. They just sell it and get rid of it so that they're just holding cash or sitting in a money market fund that's not as quote unquote risky. But remember, these are short-term traders or people who aren't really here for the long-term, monetary adoption. Like they don't care or they don't understand. They're either price sensitive or they're paper handed or they just don't care about long-term fundamentals of a monetary asset because the long-term holders don't sell at that point. So what we know, I've explained before, but what we know is that price is set at the margin by just the people who are acting in the market at that particular moment. So the long-term hodlers who understand the long-term thesis don't sell in that panic and therefore don't affect the price. We may set some degree of a price floor because if there's enough of us that aren't willing to sell, then it's just the people who are dumping it with the short-term paper hands who are affecting the price. So Bitcoin is only 16 years old. So you basically just have to equate it to like the first 16 years of gold becoming a monetary asset. And you think to yourself, well, do I think that gold had, 100% global market penetration of every person in the world knew that it was a long-term store of value, 16 years into its sort of run as a monetary asset? Like that would be silly to think that that was the case. So it's obviously not that the whole world understands Bitcoin's value yet. Gold just underwent this, process of monetization from like shiny yellow rock to jewelry and collectible to money over a long period of time. And there weren't any like price charts or like people trading it up and down to really show you, how volatile that monetization phase was. So there's no way to really know, but I would guess it's probably was volatile. It probably had different values at different parts of the world or to different people. Like who knows, right? But it probably wasn't a globally recognized stable store of value within 16 years. I think it's pretty fair to say that. So Bitcoin has only been around 16 years, but it gets a lot of attention. And so there's a lot of people who look at the price chart and go, oh, that's so volatile because it's undergoing this monetization phase. It's undergoing this global adoption. And it's still very, very tiny in comparison still to gold or to the total amount of global wealth. If you didn't already know, there's sort of estimates out there that total global wealth is $1,000 trillion, which is $1 quadrillion worth of global wealth. If you add basically all assets together, so gold, precious metals, art, cars, collectibles, equities, real estate, bonds, and money. And I'm getting this from Jesse Myers, who's Cretius BTC on Twitter, who made this chart. So he says it's his research says it's $1,000 trillion of global wealth. That's 1 quadrillion. When he made this, gold was 22 trillion. Now it's gone up a lot, so it's closer to 30 trillion. And interestingly, that measure of $30 trillion of market cap for gold is basically just a wild guess because we don't actually know how much above ground gold there is. We definitely don't know how much below ground gold there is. And we also don't know how much paper claims on gold there are. So how much is real gold? How much is paper claims on gold? We really have no idea. So again, Bitcoin beats that on verifiability because gold is all just a wild guess. So gold is about 3% of all total global wealth, and Bitcoin was 2 trillion at the time. I think it's maybe a tiny bit more. So 2 to 3 trillion market cap in Bitcoin today. So Bitcoin is 0.2 or 0.3% of all global wealth, and gold is 10 times larger than it. So it just tells you how young Bitcoin is, how early it is, how small it is compared to any other asset class. I just say that to illustrate my point on how this is still a very small, young, new asset, even though in 16 years it's been able to run up from zero, no dollar value to $110 or $12,000 value of one Bitcoin today. Now, I recognize that me basically saying all this could sound like splitting hairs or semantics of me saying like, well, Bitcoin is just like gold, but it doesn't perform like gold on the price chart. Well, at the end of the day, doesn't it have to eventually perform like gold on the price chart for it to actually be gold? I understand that there's like semantics there that are annoying or whatever. And yes, I do think that's basically true in the long term. For the sort of long-term thesis of us saying Bitcoin is digital gold, for that to be true and to pan out, it does have to eventually perform like gold on the price charts. It has to become less volatile. It has to be a quote unquote better inflation hedge. Don't get me started on CPI because CPI is BS anyways, but inflation hedge against long-term debasement of the money supply. And it has to be sort of a more stable asset in these, drawdowns or whatever that happen like last Friday. If Bitcoin is going to become the stable store of value and globally recognized store of value that we think it's going to be, it will eventually have to perform on the charts more like gold does. I think that that's fair to say. But don't take that as me saying it's a criticism or it's a drawback of Bitcoin, because what you have to understand is the whole point of the current thesis is that Bitcoin still has room to grow. It still has room to run. If it were already the globally recognized store of value like gold, and 8 billion people on the planet already knew that Bitcoin was the stable store of value and this, monetary asset that was hard money and, couldn't be debased. If everybody already knew that and understood that, we'd basically already be at $1 million Bitcoin or $10 million Bitcoin or wherever it's headed. And there wouldn't be any room left for it to grow and for more people to start understanding its value, because everybody would already understand its value. Do you understand what I'm saying? So the only reason that there's an opportunity, an asymmetric opportunity, and room for Bitcoin to grow and for you to make more friggin' money off it, basically, is because there's essentially asymmetric information in the market or in the world. So with any investment, you actually have to be grateful that there's asymmetric information, and then not everybody gets it yet, and not everybody realizes its value. Because if everybody already realized its value, it would basically be too late. Not literally too late, but essentially too late to like out for like outsized, tremendous outsized gains, right? So that's essentially the whole thesis. We believe it's just like gold, but most of the world doesn't recognize that yet. So therefore, you have an asymmetric opportunity to own it and capture more of the upside over time as more and more of the world realizes that this thing is digital gold and the best money that's ever existed. That's why there's an opportunity there. If it was already digital gold and everybody knew that, there would be little to no opportunity left, right? And basically it just comes all about timing. The sooner it happens and the price runs up and more people rush in, the less chance and time you have to get in and ahead of other people and see those purchasing power gains accrue to you. The longer it takes, the more sort of time you have, but the more sort of bored and frustrated you're going to be. If it takes like longer than my whole lifetime, then people are going to be sort of frustrated and bored by how long it's taking for Bitcoin to see the global adoption that they think it's going to achieve. Just basically, it's all about a timing game. Like if we get $1 million Bitcoin next year, people will be, freaking out and excited. If we get $1 million Bitcoin in 20 years, most people will probably think, well, that's kind of didn't do what I thought it was going to do. It took longer than I thought. If you compare what it's done in the last 16 years and it does anything close to that in the next 16 years, it's going to run like crazy. And this is going to happen generally pretty quickly. What's actually kind of interesting to me is the fact that gold is this 5,000-year-old stable store of value that's globally recognized, and still it has the ability to go up 50% year to date this year in dollar terms. Honestly, that's kind of crazy, because you would think, a lot of people say, well, won't Bitcoin reach a point where it can't grow anymore? Well, you would think after 5,000 years, gold would have reached a point where everybody knows what gold is, everybody knows what it does. It's not really going to keep growing anymore, right? Well, it just grew like 50% this year alone, which is crazy. What's fascinating is what that really tells me is how crappy fiat money really is, and how powerful the debasement of fiat money is, and how little trust people have in governments to not print fiat monies into oblivion. The fact that gold has been around for 5,000 years, 8 billion people already know it's a stable store of value, and it still has the ability to run up 50%, just tells me that the debasement of fiat money is absolutely so powerful and so crazy and will never stop. And the trust that people have in governments to stop is virtually zero. And everybody just believes they're just going to keep printing more and more money, because you would think gold would have sort of captured all the value that it could capture, but clearly it hasn't, because fiat monies can continue to be printed into oblivion. Gold still has more ability to capture more value in dollar terms. Now, the question is, does gold keep capturing more value in purchasing power terms, in real terms, or does it just keep capturing more value in nominal terms because the value of dollars and fiat currencies keep going down? Can you actually buy more stuff, more goods and services with the same amount of gold? Or can you just buy the same amount of stuff with gold and the dollar value is going down and down and down? So it's kind of a dense topic, and I'll see if I can just say this real quickly. But the idea is, eventually, if governments couldn't keep printing more and more money, gold would still capture more value in purchasing power terms as productivity increased and technological innovation increased and prices fell due to the natural deflation of technology, making another video about this shortly, about Jeff Booth's thesis about how all technology is deflationary. Now, gold would continue to capture more purchasing power as prices fall in a deflationary world. So I'm saying that because that's actually also true for the thesis of Bitcoin. We always say Bitcoin has no top because fiat has no bottom. So in the same way that gold has been around for 5,000 years and can still run up 50% in dollar terms in 1 year because of the debasement of the dollar and fiat currencies, Bitcoin can run up in dollar terms forever as dollars are printed into oblivion and their value goes down. And Bitcoin can also continue to appreciate in purchasing power terms as deflationary nature of technology and innovation and productivity continues to make prices fall. So Bitcoin can go up forever in real terms, nominal terms, purchasing power terms, because of deflationary nature of technology and the infinite nature of fiat money. Hope that wasn't too dense or too confusing. There's a lot of concepts packed into there. I'm making another video soon about the debasement trade. I'm making another video soon about the Jeff Booth deflationary money thesis. So stick around for those. Subscribe to the channel if you haven't already, so you'll get those when they come out. But clearly the point is Bitcoin is much younger, much less well known. The branding hasn't caught up to the entire world yet. So it has more ability to swing to the upside than gold does. And it has more ability to swing to the downside. It can be late on a Friday when global markets are panicked. The only thing is open is the crypto markets. And Bitcoin is more susceptible to being sold off in a panic like that and to liquidation cascades where people are using margin and leverage and they get liquidated and the price drops. That also doesn't happen as much with gold because it's much more held by institutions and central banks and much less likely to be held by people who are trading it on leverage or margin, over the weekend. So basically, at the end of the day, gold and Bitcoin are both reflections of how broken our money is. We shouldn't really honestly have this thing where gold bugs and Bitcoiners butt heads and are against each other. Really, we both believe in the same things. 99% of what we believe and want for the world is the same. It just come to different conclusions about what the ultimate solution is. And gold bugs will always laugh and point when Bitcoin's more volatile, and Bitcoiners will always say, but we have way more room to run up because Bitcoin is so young and has less adoption yet. And if you want to hold the analog version of sound money, the shiny yellow rock that's been around for thousands of years, that's much more stable and has much more adoption and much more secure and less risky and less volatile, then, go ahead and do that. But for the Bitcoin thesis, part of the problem with gold is this essentially failed as global money. The gold standard failed. It didn't fail as a store of value. It still works as that because people can still use it to hedge against the debasement of the dollar. But it failed as global money. It failed in essentially in its medium of exchange use because governments centralized all the gold and printed paper money on top of it that was redeemable for gold. But then they broke that promise and they printed more paper than they had gold. And that essentially gold's fatal flaw. It's too hard to use as a medium of exchange and to transfer around the world. So it becomes centralized and governments will always print paper on top of the gold and then break the peg and print more paper than they have gold to back it. That's why Bitcoin was invented, to solve basically that particular problem. Other problems too, but really that one. So Bitcoin is the new, instead of analog sound money that's a shiny yellow rock, Bitcoin is digital sound money for the future and a digital age that can't be debased at all and can be transferred anywhere in the world. So there's no need to print paper Bitcoin on top of it. And Bitcoin is the new digital version of sound money, gold, but upgraded, gold 2.0, the better version of gold. That's why it's the hardest money we've ever seen and the best form of money that we've ever seen. And yeah, we got to make sure that it doesn't just get all centralized and then governments and banks and institutions start printing paper Bitcoin on top of it and defeating the whole purpose of verifiable on-chain Bitcoin in the first place. Because this is another tangent, but that's why Jeff Booth says if it's not used as a medium of exchange, it will break as a store of value. Because if it's only used as a store of value and we let governments and institutions centralize all of it and then print Bitcoin claims, coupons and IOUs for Bitcoin on top of it, they will inevitably do what they did with gold, which is print more claims than they have Bitcoin to back it. And then the 21 million supply cap is basically pointless because you have more paper Bitcoin claims floating around than you have actual Bitcoin. And it's highly believed that that's what's happening with gold today. Anyways, there's more paper claims of gold floating around than there is actual gold to back it. So there's a lot that's pretty dense. There's a lot packed in there. I'm making other videos. I have made other videos on topics like this. If you want to watch this playlist here to watch some of those and better understand the value of Bitcoin. and I'm making more in the future. So subscribe to the channel so you can get those. That, to me, is my version of the answer of if Bitcoin is supposed to be digital gold, why doesn't it behave exactly like gold? Now you understand when we say it's digital gold, it's because of the fundamentals that underlie the value of both of those two things. Thanks for watching the video. You can zap me sats via the QR code on the screen using your Lightning wallet. Subscribe if you haven't already. And as always, you never forget that Bitcoin is inevitable.